Got a tax refund? That's great news. But pause for just a second and let's talk about it before you make a decision of what to do with it. In this episode, we're going to go through some really important questions you should ask yourself of why in the world you got that tax refund. Hey everyone, welcome back to Retirement Redefined. I'm your host, Brad Gatto. Thanks for joining us again on Retirement Redefined. We're getting into the year here, and I love it, by the way. It's March as I record this, and what March means is it's not February. And what February means is it's not January. So we're getting closer to spring. It's March Madness time of the year. If you know me well at all, you'll know that I find March Madness to be a national holiday. And so those first two tournament days of the year, every year, I look forward to. So the weather's kind of turning here a little bit, which is, I feel like I need to knock on wood so you can hear that in the background for all of us Minnesotans that live here in Minnesota with me that are listening in. I don't want to be the guy that jinxes it because it's entirely possible we could be getting snow in May. But as of right now, it's pretty good. It's pretty good. If I remember right from kindergarten, March is the month of in like a lion, out like a lamb. And so far, it's playing out that way. And the forecast looks great. So excited about spring, excited about March Madness. But what it also means is it's tax season. Everybody's absolute favorite. If you couldn't look forward to something more after the first of the year and your New Year's resolutions and trying to stick with those, it's this idea or concept that it's time to reconcile with the IRS. It's your time to go back into the records from 2025 and say, okay, I went through the year. It all happened. The income, the investment stuff, the deductions, the credits. I now have to put it all on paper for the IRS, and I have to kind of true up the bill. And some of you walk away in tax season owing more money. You didn't pay enough last year. And others of you end up actually getting money back. That's the side of the conversation that I want to start with today and really go through three questions you probably should be asking yourself before you do anything with that refund. But before I get to that, into those questions, let me just say this. Taxes, this is kind of a big misconception in my mind. Tax filing, you guys, when we do this every single year, all we're doing is going back and redoing the math. Because in 2025, we paid taxes, right? We were all paying taxes throughout the year, whether you're still working and paying it through your W-2 paycheck, or you're self-employed and you're paying, through quarterly estimates, or you're retired and it's being drawn out of your Social Security or taken directly out of your pension, or again, paying quarterly estimates on other income that's coming in the door. However you're getting it done, in reality, all you're doing throughout the year is guessing on what the bill is going to be because we don't know exactly how our 1040 is going to play out. And the analogy I like to use is it's kind of like when you go to a restaurant and you eat a meal. Can you imagine going to a restaurant where they said, hey, we don't know what you're going to order yet, so we don't know exactly what your bill is going to look like, but we want you to prepay. We're going to make you pay for your whole meal up front. And then you go ahead and order, eat your food, have your experience, and at the end, we'll reconcile. So you might have ordered more food than we originally thought, maybe less food, maybe one less cocktail because you made a good decision, or you avoided the dessert that they had put into your prepayment. And so some people in that restaurant are going to get refunds because they just paid the restaurant too much money up front. And other people are going to have to pay more in because they spent more money than was anticipated. I mean, that's essentially the game we're playing with the IRS every year. It's just a lot more complicated than that, a lot more moving parts, especially for most of you listeners. And so we do the actual reconciliation. So when you're gathering all these documents, your W-2s and your 1099s and your receipts from your doctor's visits and the gifts to charity and all the documentation around the property taxes that you paid and the state taxes that you paid and just anything else. And then we take all that documentation, we put it on the 1040, and we figure out how we came out. That being said, one of the big misconceptions inside of that is that when you do that reconciliation, let's just say you're paying to have that done. You're paying a third party, whether it's an H&R Block or it's a CPA firm or you're just using an enrolled agent or whoever, however you're getting this done. There's a lot of people that believe that if they get a refund, they've got a really good CPA or that H&R Block is a genius. When in reality, that's not usually the case. Because if you think about it, you've already made all your decisions. 2025, the year in which we're filing tax returns for right now, already happened. It's over. You already made all the decisions. Now it's just a matter of that reconciliation, a word I've said 10 times probably by now. So there's really not a ton a CPA can do. Even the best, most educated, most experienced CPA in the world can do for the average consumer in March of 2026 for their 2025 taxes, other than to just let you know, hey, we ran the tests. You either failed or you passed. You get a refund or you owe more. It's not anything that they're doing necessarily other than just taking your documents, putting them into the system, and letting you know what the bill is. So important to understand that. So let's get to question number one. We're going to start to the side of the fence that you are a person that got this refund. The first question you should be asking yourself is, why? Why did I get a refund? I think this is a really important question to ask because at the end of the day, a refund is an overpayment. You just paid too much. They're giving you your money back. A lot of people look at that refund and they're like, oh man, like I said, I got a great CPA, H&R Block or geniuses. You know, they put all my stuff in, filed my taxes. I got $2,000 back. I got $10,000 back. They must be really smart. Not necessarily. You just overpaid the government. You paid them too much. And so they have to pay you back. So the question you should be asking yourself is, do I really want to loan my money to the government all year long for the interest rate that the government pays? Which, if you're unfamiliar, the interest rate the government pays isn't great. It's zero. They pay you nothing for borrowing your money that you don't owe them all year long, only to pay you back on the back end with no interest. That's a horrible savings account, at least on a spreadsheet, the worst savings account. Even your standard, large national bank checking account usually pays 0.02%, which is almost nothing, but exponentially more than the government pays you, right? So on a spreadsheet, terrible, terrible idea to get a tax refund. Now I know there's certain listeners out there going, hey, Brad, I love my tax refund because yes, on a spreadsheet, it doesn't make any sense, but man, I'm not a great saver. And if I don't do this all year long and overpay the government, I won't save the money anyway. And it kind of reminds me of, in Minnesota, we can relate to this. There's certain parts of the country that can never relate to this. We're coming up on that season where hopefully we get to put our winter coat away and we don't have to touch it for 6, 7, 8 months. And then you go to pull it back out in November and you realize there's $20 in the left pocket. And you're like, oh yeah, score. This is amazing. I just found $20. Well, you did, but it was always your money. It's not new money. It was your money to begin with that you lost for a period of time and then you just got it back. It's not new additional money. That's what a tax refund is. It's you just kind of putting your hand in that left pocket of your coat and going, hey, in April every year, I pull that coat back out of the closet and I have money in there that I forgot about. And for some people, that is a wonderful behavioral thing. But I'm just telling you on a spreadsheet, not a great idea. And so looking at what happened throughout the year to figure out why you got the refund is really important. And maybe you're going to learn something relative to, hey, the way that I'm looking at my taxes or the way that I'm having things withheld in my paychecks or through Social Security is inefficient, and I can change that. Because what's interesting is, if I'll just use an easy number, it makes my math in my head easier. Let's just say you got a pretty big refund. You got $12,000. Well, you guys, that's $1,000 a month that you're paying in taxes that you don't have to pay. And so if the majority of, let's say you're retired and the majority of your taxes are being withheld out of a pension account, a pension that you have, and a pension payment and a Social Security payment. It's like, okay, well, if we just change the withholdings on here, knowing that you're overpaying every single month, we can put $1,000 more per month back in your pocket and then get to the end of the year and we still don't owe anything. We just don't get this check back. And maybe that just is better cash flow for your family and can put you in a better spot. And so understanding how you're already paying taxes, where it's coming from, and do we need to adjust something? Also kind of thinking about, was there a big income change this year? Or was there a bonus that came in? Or was there massive investment activity that we didn't anticipate? Like, what is it that caused this refund to happen? Do we still want to maintain a refund? And if we do, at what level? and what can we change inside of your situation? Because at the end of the day, you guys, you can kind of control this. Because if taxes are not an opinion, they're a law. So you can kind of build out a pro forma. You can build a hypothetical and say, okay, this is what I think is going to happen in 2026. And maybe 2026 will be the first year you ever do this based on this podcast episode. You say, I want to basically build my 2026 tax return right now to figure out if the year plays out the way that I think it's going to. I've got this much income coming in the door, this much Social Security, or this much, like I said, pension, or I got an annuity paying me out, or I've got this many dividends coming off of my stock portfolio, or I've got interest income because I'm sitting on a ton of cash and I got a bunch of interest income or whatever. And this is what I'm going to give away to charity. And we're going to put it all into a hypothetical 1040. And I'm going to tell you what your tax bill is going to be. And then we can reverse engineer how your taxes are withheld and create efficiency relative to how you pay the federal government. I'll just tell you, I'll give you a real example. As a self-employed, business owner, I'm one of those people that wants to hold on to my money as long as I possibly can. I want to pay the IRS as little as I can for as long as I can, and then true up as late as I can. I don't want to give them one penny faster than I absolutely have to. And so I build my life that way. I plan for it. In fact, I know other business owners, you guys, that are crazy enough that they don't like paying their tax bills so much that they purposely way underpay, knowing that they've got a bill coming. But not only do they have a bill, they underpaid so much they actually have a penalty to the IRS. And they're just like, I don't care. I know that it's coming, and that's just what I want. I think they're a little nuts. But there are definitely people that do that. If you take anything away from that, just know that it can be curated. You can essentially do the math and figure out, based on some reasonable expectations, that your bill is going to look somewhat like this. And so let's plan around that. So the first question needs to be, why did I get a refund? And is there or could there be something I should change? And what education do I need to understand why I owe the federal government what I owe, which then ends up in this refund or possibly owing at the end of the year. Question number 2. What is the highest impact use of that money? So if you're that person that just came into the found money in your left coat pocket through a tax refund, now the question is, what do you do with it? Well, there's only 3 things you can do with any dollar you get, no matter how you get it. It's you save it, you spend it, or you give it away, right? And so from a planning perspective as a financial advisor, I would implore all of you who are listening, if you're one of those people that got a refund, this is when you've got a financial advisor on retainer, this is an opportunity to reach out to the advisor and say, hey, I just came into some money. It's $1,000. It's 10 grand. It's whatever it is. Some of you crazy people are getting like 30 or 40 or 50,000. I've seen some pretty crazy refunds. Give your advisor a call and be like, hey, what's the highest and best use of this money? Knowing that I want to take this cruise in 6 months, should I just hold on to it and use this? Because I know we had originally planned on pulling some money out of my brokerage account in 6 months to fund the cruise. But now that I'm sitting on the cash, is that better for me to keep? Or should I just reinvest it and we'll stick with plan A, which was the brokerage account? So maybe it turns into a future spending. Maybe it is just a saved thing. Okay, I got an extra couple grand. Where do we put it? Can I put it into a Roth IRA? Do I still have earned income? Is it going to the brokerage account? If it does go into the brokerage account, am I investing it as if it's for tomorrow, 10 years from now? Or what is that going to look like? What does my cash situation look like? Do I need more in my emergency fund? Is my emergency fund a little bit light? And so this can kind of act as a buoy or to kind of prop that up. Again, any other major purchases, not just like a vacation, whether you want to buy a house, a car, or something like that we can think about. Or unfortunately, some of us, a lot of us, most of us, I guess I should say, we have debt. Whether it's good debt like a mortgage or bad debt like a credit card, is that the best place to deploy that money? These are really good conversations to have with your financial advisor. So question number 2, like I said before, is what is the highest impact use of this money now that it's sitting in my hands? Question number 3, wow, goodness sakes. I'm going to try that again. Does this decision fit into my overall plan? One of the biggest mistakes, whether it's a tax refund or it's a bonus at work or it's a distribution out of an account you didn't expect or an inheritance or whatever, I call these windfall monies. They're not expected and then just kind of happen. One of the biggest missteps is not thinking about it in the bigger picture of your financial plan, and the decision that you make with that money, does that fit into the overall plan? Whether that's thinking about what account type, does it make sense to put that money in? What are the tax implications of my decision with this money? How does it affect my cash flow? Does it support my other financial goals, the decisions that I'm making? It's really hard in any area of life, in any area of life as human beings, to reconcile decisions like that. My wife and I, as an example, we're just kind of having this conversation about our house. We've been lucky enough to be able to do a little bit of remodeling on the home the last couple of years. And although that's true, like most homeowners, and I think all of you listening can probably relate to this, there's always things you want to do to your house. The list is never over. And so although we've, again, been lucky enough to do some renovations the last couple of years, I wouldn't say we've gotten through all of it. In fact, my wife just had somebody come out and give us a quote to do something else to the house recently. Luckily for me, frankly, it was the most ridiculous quote I've ever seen in my life. So it immediately shot down the conversation. Even though it's something that my wife wanted to do, she wouldn't have, even in her wants and desires, have paid what this quote was. And so it made the conversation easy. But in the big picture, and this is what I'm getting at, the conversation, the question I posed to her the other night was, do we want to spend any more money on this house? Let's just say we have something we want to do. And let's just say, for the sake of conversation, it costs 10 grand. Or it costs $1,000, or it costs 100 grand. Doesn't matter what the number is. Is the highest and best use of that money to go into this home or to put away for our next house? Because every time we spend money on this house, we're further away from whatever. My wife has a dream to live on water. She wants to live on water, a lake, but we don't now. But anytime we put money into this house, what we could possibly be doing is, instead of doing that, put it into a savings account for a future down payment on a different home that is, in fact, on a lake. I'm not saying we're ever going to get there, that we're ever going to own a lake home, but it's interesting how, if you don't frame it that way, what you don't realize is the decision that I'm making today could negatively affect a different decision that I want in the future. And would I rather have the new set of doors, or would I rather have the new paint job on my existing home, or would I rather just be patient, live with what I have, and buy a different home in the future? And frankly, the realization that my wife and I came to is that I think we're kind of done spending money in this house. I think the highest and best use of this money at this time, based on our overall financial plan and the things that we want and the desires that we have, is just to start saving that money for a house that, although we may not get some of the short-term things that we want in the house that we have today, ultimately, I would rather, specifically my wife, happily married man, which means my wife is happy, is that future home that is on that lake that my wife wants. And so how does the decisions that you're making today affect your overall financial plan? I'm going to give one more example there before we kind of wrap this episode up. And the reason I want to give this example is because it's something that I think a lot of retirees deal with, is this fear of spending money. They get to retirement and they're like, gosh, I need to understand how this fits into my overall financial plan, because I really do want to take this vacation. I really do want to have some fun after I retire. And I really do want to, maybe it is that remodel you've been waiting to do on your home until you retire, something like that. And a lot of retirees, unfortunately, never make the decision to spend that money on whatever it is. And it's because they're living out of fear, because they can't answer this question. How does this affect my overall financial plan? And if I choose to do this thing, whether it's a fun thing or not, how does it affect me tomorrow? And it's especially scary when you think about the psychology of, number one, the machine that's been providing the income for your entire life and keeping your life afloat just retired. So there's no more income coming in the door. And secondarily, you've always been a saver. You've lived below means, so you can continue to put money away. So the pile of money has done nothing but grow. Now, you need to utilize that pile of money to spend. So going from putting more money into that pile every month or every quarter, every year, you go from that to taking money out every month or every quarter or every year. It's a really hard dynamic to do. So whether it's a tax refund or it's any other situation where you're thinking about spending money, that question is just a huge question. How does this fit into my overall financial plan? One of my favorite things to do, you guys, when it comes to financial planning, specifically for our pre-retiree and retiree clients, is helping them understand the ramifications of that spending and therefore giving them the permission to do it, knowing that it's not going to upset the overall plan. So Three really good questions. When it comes to taxes, you guys, I would encourage you in this way. Nobody should be surprised when they get a tax refund or they have to pay in at the end of the year. This should be a fairly known expectation. Maybe not down to the exact penny, but with a reasonable expectation, you should know if you're a person that's going to get a refund or if you're the person that's going to have to pay in, and it should be curated. You should know why that's happening and that that's what's best for your family. So that's number one. And if that's not you, please reach out to us because not only as we talked about in previous episodes, not only do we have the wealth management branch of what we do, but we have fiat tax. We have really good CPAs that help our advisors, our wealth advisors, kind of put these two things together and make sure that tax filing is just kind of an afterthought to all the planning that's already been done throughout the year. And so if that's not something that you're used to having, a relationship that you're, with your CPA that you have currently, I'd highly encourage you to reach out to us and take us up on what I would call the most important part of your taxes every year, which is the planning side, not the actual filing side. And last but not least, if you're one of those people that was lucky enough to come into a refund or you're coming into a refund, would love to talk to you if you're an existing client to Fiat. Call your advisor, have that conversation, ask these 3 questions with your advisor. And if you're not a current client and you don't have somebody else to ask those questions to, feel free to reach out to us. We would love to start the conversation right there with you. That being said, thanks for joining us for this episode of Retirement Redefined. As I said before, I'm your host, Brad Gatto. If you want any more information on Fiat at all, on anything from the fun events that we put together for all of you to attend, to education, to what we've got going on in the company these days, it's all going to be found at the website, you guys, fiatwm.com. Enjoy your day, and we'll see you all for the next episode.